innovation solves problems. Some of the innovators out there are solving problems. I mean, I think the most dramatic example of it to us was the behavior of Bitcoin last week. It absolutely took off. It was a flight to safety vehicle. And so it is really proof of concept that innovation solves problems. There are, in Bitcoin, fully decentralized, fully transparent, auditable, which is addressing all of the banking's problems right now. And so a flight to safety, a little bit of an insurance policy. There's no central point of failure in Bitcoin. One of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. For the base case, I would suggest quite conservative. We've dialed some of them down since last year. I know that corporate treasuries pulled away from Bitcoin because the regulators were pulling them away from Bitcoin on their balance sheet. So we've pulled back there. But we do believe that the behavior of the price through this crisis is going to attract more institutions, for example. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class diversifying their portfolios. And I believe it's somewhere between 2.5% and 6.5%. So not crazy. These are the sorts of allocations they would have made to emerging new categories of assets like real estate in the 70s, emerging markets and small cap in the 80s and 90s. You know, in the beginning of the crisis, it seemed like regulators wanted to blame crypto instead of the significant rise in interest rates and the deposit outflows. Now we're seeing it as a solution to the problem, but the regulators are still reticent. Something interesting happened today, or maybe it was yesterday. Governor DeSantis basically said that he was going to allow. I don't know if he said this exactly, but the conclusion of his saying we're going to set Florida apart from the rest of the nation was this ability to touch companies that touch crypto. After all, these are cash deposits. They're fiat deposits. They're not crypto. And this can be done on a state-by-state basis. So I think you'll see Florida, like it has done in many other ways, distinguish itself from the rest of the pack. A couple of things have happened here that have never happened really in history, and so the banks didn't expect it. The first was interest rates up 19-fold in less than a year. Never happened. Under Volcker, which it was twofold, 10 to 20%. And the low base does matter. Many people dismissed it saying, oh, just such a low base. No, expectations were a low base. So that was the first. We've never seen that magnitude of an earthquake, I would say. Then the second thing that no one expected, again, because it hasn't happened in such a long time, was deposits leaving the system. For Silicon Valley Bank, it was venture capital facing a funding drought, and so they had to draw down their deposits. But then for others, you've got money market funds paying much higher than deposits, attracting flows. So that combination was lethal. And so now they have the backstop in. Now what do we have? We have they're going to be paying up if they're depending on the facility. They'll pay roughly 4.37% right now is that rate, OIS plus 10. And that's much higher than many of them have been paying for deposits, number one, while in the case of Silicon Valley Bank, their average held to maturity security on the asset side of their balance sheet was only 1.6. So they're going to see net interest losses. Now, instead of having mark-to-market hit equity, these losses are going to hit earnings. if you look at upstream, what's going on, commodity prices are coming down quite dramatically, some by 70, 80%. And I would also say the retail call was very right. I think you'll agree on that. The discounting, we think, is going to continue to work its way through the system from the commodity price level to downstream near the consumer. And you can see this. Tesla is cutting prices. Many people say, oh, it's because of competition. No, it's because their commodity prices are coming down. And Elon's even talking about deflation, and the cost associated with innovation is coming down because it follows a learning curve. So I think the innovation that our companies are delivering are going to be one part of the deflation. Commodity prices, another. And I will also tell you, the yield curve, the week before last was down, inverted by as much more than 100 basis points. That also is a deflationary signal, as is what's now going on in the banking system. Yes. I think the banking system is fearing deflation. We invest exclusively in disruptive innovation, nothing else. What we did do was we concentrated our flagship strategy, so ARKK and our other strategies, ARKQ, ARKW, ARKF, and we moved in the flagship's case from 58 names in February of 21 when we peaked down to 27, 28 names. We have a scoring system, and the scoring system is based on variables we believe are very important to innovation. And so we concentrated the portfolio. Many people in the traditional asset management world, when they go through a risk-off period, they will diversify their portfolios by moving closer to their benchmarks. What they're doing is typically selling our kinds of names. Yeah. And so that is why they're putting extreme pressure on them. We'll create losses by selling stocks, and that gives us a tax loss asset, which we have. It's over $2 billion right now, against which we can take future gains, and then concentrate towards our highest conviction names. We have a paper on our site which shows the benefits of this concentration strategy during risk off and diversification strategy during risk on. So we're the closest thing to a venture strategy to a venture capital fund in the public equity markets. And a venture fund has a long-term investment horizon. If an investor cannot have that long-term an investment horizon, then they should allocate perhaps a small amount to our strategy, say 1 or 2%, which, by the way, from what we can tell, most advisors have us at that 1 to 3% range. Now, why would you put any if the risk was the volatility that you see on this chart? It is because our companies are going to disrupt the traditional world order. And if we're right, then the large cap benchmarks and even some of the mid cap funds are going to be disrupted. We will be a hedge. Now, I will say and submit to you that last year was the most unusual year of my investment career. And not only mine, but bond investors. So bond investors had the worst year in 200 and some odd years. When interest rates go up 19-fold in less than a year, it's going to kill long-duration assets. Bonds are long-duration assets. They've never seen a year like that. ARK is a long-duration asset. But if we're right, and these companies are going to disrupt the traditional world order, then we want to be on the right side of change, and the market will come our way, away from those benchmarks, which represent the traditional world order, to our strategies.
Time for the important announcement. Now you can join our community of 5,000 plus members and active stock market investors and receive the latest timely stock market and economy related updates, like what stocks to buy and what stocks to ignore or sell to save your portfolios. Economy and stock market related commentary and alerts are shared regularly on a weekly basis. You can also chat with me during market hours and ask me any questions. Join our community on Discord through Patreon. Upon becoming a member, you'll be able to enjoy some great perks. For example, you'll be able to receive proper buying and selling alerts for a wide range of potential stocks. We'll also share tips and alerts for option trading. You'll receive a weekly guide for stocks performance and updates with technical analysis. You'll be able to chat with over 5,000 like-minded members all the time. And you'll also be able to chat with me during market hours. I'd be delighted if you could join us. The link to join is given in the description below. Thanks, and see you on the other side.